How do you position from here? My next guest, staying defensive, hedging equities with gold and silver. Michael Cuggino, president of the Permanent Portfolio family of funds, joins me now. Michael, how defensive do you have to be given the debt ceiling uncertainty and the questions about what the Fed's going to do? And if the Fed doesn't continue to hike, is it because economic conditions are so bad that you had to be defensive anyway?
Yeah, good afternoon, John. Yeah, I mean, the equity market, or at least a few stocks in the equity market, would lead you to believe you don't need to be defensive at all. If you look at the concentration in a dozen stocks or so, that's responsible for most of the gains, and it's certainly tech heavy. When you look at the broader market, you're break even to slightly negative on most broader indices. So there is reservations there from investors on whether you should be buying stocks. On the other side of the equation, I think you have to take a look at what the Fed is going to do. I think Steve's summary was great. I thought the tone was measured today. And to me, it argued for a watch and wait type of stance in June, barring some other data that really, materially contradicts the current state of affairs in the next month or so. So from that standpoint, that would be bullish. So investors are caught in the middle. They're vacillating depending on the news of the day between taking on more risk and buying stocks and being first to take care of that rally, or being defensive and hedging and being diversified.
Michael, give me your perspective on the state of today's broad market risk, particularly with the major indices and with ETFs, because not only are big stocks popular right now because they're seen as safe and have their valuations gotten stretched, but they're so heavily weighted in so many indices and ETFs right now.
Yeah, it's really interesting. This year, there was a theme that has actually worked, so it's hard to argue with it, at least up until it doesn't, that large cap tech is recession proof, And so you've had a lot of money flows go into that. The stocks have all gone up. They've performed. It's really the only part of the equity market that really has performed. And so, until it doesn't work, it's working. I wouldn't necessarily generally associate tech investing with possible recessions, though. So it is a rather interesting short-term anomaly that I guess we need to see what happens in the future.
Okay, so
from our perspective, we would rather be more broadly based. We believe that there is substantial risk. I would say, look, the soft landing argument is a possibility. It's a reasonable one as long as labor holds up. But labor is a lagging indicator, and if labor falls out of bed, then I think you have a much different scenario. But at the moment, it hasn't. But we would weight more towards the recessionary risk in that the tightening of credit, the tightening of liquidity, the aggressiveness of the rate hikes that haven't really fully been felt in the economy yet, would argue for a slowdown sometime in the second half of the year of 24. And the Fed would be in a difficult position to cut too quickly because inflation is stubborn and maybe declining.
So, Steve Liesman, about 4 weeks from now, what is it, June 14th, I think, is when we get that next Fed meeting. What are the key data points ahead of that Powell and the rest of the committee is going to be watching and that investors should also be watching? It seems like they'd like to pause, but who knows whether they can.
Well, I think there's a couple things that are out there. I think the first thing is watching the trajectory of growth. It's interesting. I've seen some forecasts, John, that growth may be accelerating this quarter. We did, 1 and change last quarter. We might do 2, according to some estimates I've seen. Some are down at 1, but it certainly hasn't fallen out of bed. And just to Michael's comment, what's been fascinating to me is the ability of companies to make money. We know they could make money before inflation. They're still making money during inflation. And it seems like if inflation were to fall, companies could still make money. Again, to your point, depending upon how and why inflation falls. If it falls because of a deep recession, that's another story. We'll also have John's unemployment report, and we're watching those weekly jobless claims. An interesting factor we saw this week was claims went up on a weekly basis, but the continuing claims actually fell. Seemed like people losing their jobs are going back to work. So the Fed will be gauging the tightness of the job market. And of course, there are those inflation reports we'll be watching to see.